Good morning, traders and investors. Steve Gans here with the weekend update for October 5th, 2025. So, a couple things here. Government shutdown this last week. I am really surprised that did not have some sort of a higher level of negative impact on our markets. Our markets just continued to grind higher like it was a non-issue. And maybe if it gets resolved in short time, maybe it will be a non-issue. I don't know. But the whole thing just seems odd to me. In fact, we're going to see as we look through our charts today that volatility isn't even up. The VIX reading is just up a little tick, hardly at all. So none of that made a lot of sense to me. So I called an analyst friend of mine in the industry that works for one of the big analyst firms and asked him, what is going on here? This doesn't make logical sense to me. And he said, which I guess does make sense, he said at the end of the day, if interest rates do go lower, which forget all the government shutdown stuff, the anticipation is that there's going to be more interest rate cuts the rest of this year. That is fueling this market. And there are still trillions of dollars on the sidelines waiting to come in. Now, apparently the net professionals are a little more short in the market. So a lot of the big money is also thinking like I am of how can we be where we are here? But the retail traders continue to pound this market, buying into it, driving it higher. And again, if corporate profits are in fact going to pick up based on a reduced cost to borrow money, maybe that's correct. So at the end of the day, while I may think one thing, the market is doing what it's going to do. And right now, that market is continuing to just grind higher here. As we can see, that trend line is solidly intact, moving higher. We made all new highs Thursday and Friday in the SPX, and our volume on those up days is also a little bit higher, which is a bullish signal. So let's look at SPY. It's going to look pretty much exactly the same. Again, we're also seeing more volume on up days than down days. Also broke to new high. Again, SPY is just a mirror of SPX, as is the ES, the S&P futures market. And again, largely the same thing here. We're getting good volume on up days, but we did have a little more volume on a couple down days there as well. And again, it's often the professional markets that are trading the futures market. So that may lead into what I mentioned a couple minutes ago, that many times the professionals are a little bit more short this market, or may not be quite as bullish as the retail traders that are in there buying SPY and or SPX. Let's look at the volatility here on the S&P 500. And again, while it's off its lows, it's certainly not at all what I would call elevated, given the potential situation that we're looking at. Take a look at the Qs. Qs also broke to all new highs. The up days have had predominantly overall more volume than the down days. Again, that volume kind of leads into the thesis of we are still in bull mode. Our trend line, if we were to extend that out, we could even draw a channel on this, and we're running fine in that channel. And that channel, by the way, is a steeper channel than this whole channel is. So the new channel is actually accelerating even a little bit faster than the old channel was. How long that's going to last for, I don't know, but we are busting out of this long-term channel here to the upside, creating a new dynamic or a new, maybe more accelerated channel right now. If we look at volatility on the NASDAQ, we'll see volatility, while again, it's off its lows, it's not really elevated in any way. So there's not massive fear coming into the market. There's not lots of people buying insurance on their portfolios right now. Then we'll take a look at IWM. IWM, I want you to notice something here. Again, the up days, the volume has been a little bit higher. Let's take a look at the level on the IWM here, the Russell Small Cap. I'm going to zoom way back here so we can see all the way back here at the end of 2024. We had that level. And then we go all the way back here to 2022. That's the last time we were at this level. So while the other indexes have, in fact, over the last couple of years, continued to make new highs, IWM has not. IWM has continued to just chop sideways in this channel for a while. Then it did finally get into an up channel, sold way off on the tariff news, again, right down to a support level, I might add, and then took off again to the upside. And now we're pushing on these all-time highs in IWM. Now, my expectation here, quite frankly, is small caps also benefit quite a bit from reduced interest rates. We're seeing the up days has a little bit higher volume. I think we're going to be breaking out here as well. I think IWM can break out to all new highs. If that happens, we have all three indexes pushing new highs and nothing but bullish until something major steps in and potentially changes that. We look at the volatility on IWM. It's the lowest of all of them. It's almost back to its all-time lows, or pushing down toward those all-time lows, are all the way back here in that 20 range. But volatility is off considerably in IWM as well. And then finally, we'll take a look at GLD, or gold. As I had mentioned a few weeks ago now, gold was in this pattern here. I had mentioned right in this range that if it comes down and touches that, I think that would be a bullish signal to go long gold, expecting it to come back to the top of the channel here, possibly punch through. And of course, it did punch through and continues to just barrel higher here. And that's a little bit unusual that gold is going higher at the same time all the markets are. Many times gold kind of acts as an inverse to the other markets. So that's just adding more fuel on this everything is bullish fire right now. And again, I personally don't feel all of that is justified right now, but I understand it a little bit more after talking to my friend that's at the analyst firm, and he explained to me the whole situation with interest rates. So at this point, I am cautiously bullish, continue to be bullish in this market, unless some of those underlying dynamics change. I also asked him about the government shutdown, by the way, and this firm pays many high-priced analysts that are looking at that whole thing, and they're anticipating a 25 to 35-day shutdown. That's their best guess. And it is exactly that, a guess. Of course, nobody knows. And the political environment is awkward at best in Washington. Take that for whatever it's worth, which is quite possibly nothing. Now, for those of you that want an update on the alert service, I'm going to put a link on the screen here at the end of this video to the Flagonal latest analysis. I've got 100 trades under belt now, all live trades, a 94% win rate. It has been totally dominating, kicking butt. I'm working on my deep dive class on that. I've got the bulk of it done. Quite frankly, I'm thinking that I'm going to be able to release the entire class. Originally, I'd said November. I'm thinking I'm going to be able to release it yet this week. I'm just putting some finishing touches and read much of the content. It's going to be in that 10 to 11, 12 hours worth of content that explains all the details on this trade. If it is something of interest to you, I'm going to put a link right here on the screen right now for that deep dive course. And now I'm going to put a second link on the screen that you'll see right now. And that second link is for the alert service, where I am making those trades live so that people can see them in real time. They can see me actually put on the trade, adjust the trade if it needs it. Many of them have not required adjusting. In that video I'm going to share at the end, I'll get into all of those stats, the number of winners, losers, etc., as well as how many of them required adjusting versus how many did not. I will say this trade is not for a beginner, somebody that's going to consider this class or consider the alert service. You need to have traded multi-leg option strategies before, ideally condors maybe butterflies, possibly some time spreads, a calendar, or a diagonal. If you have traded those sorts of trades before, this is certainly a trade you could and should be looking at. I'll also tell you that this trade has generated about $28,000 in return since I started trading it live. I'm trading at pretty small size. The average trade is going to be around $2,500 in buying power used. I am basing my stats off of using $5,000 in buying power. And with those stats, this thing is averaging about 150% or higher annual return. So it is performing quite well and is a very robust trade. Now, in the alert service this week, I just closed out 2 more winning Flyagonal trades. You'll notice here, this is one of them. This was in Tesla, and it's not a massive return. It's a 5% return, but that was in 3 days. So that makes an annual return in that 628% range. Then the second one was a trade in SPX that I was only in a day. It was 5.9%, which annualized is about a 2,100% return. Both of these trades required no adjustment. And if my memory serves me correctly, this will be the 13th and 14th, or maybe 14th and 15th winning trades in a row that I've done in the alert service. So again, if you're interested in knowing more about the alert service, I'm putting a QR code on the screen here so you can check that out. And then at the end of this video right now, you're going to also see the link to the video that explains more about the Flyagonal and gives you the summary on those 100 recent live trades. And with that, I'll see everyone later. Take care.